Poštovani saradnici,
dear associates, dear guests, friends, media representatives, I wish you a good day and I wish you a welcome to the presentation of the May inflation report. As usual, in today's conference, we will present key information from the report, notably current economic developments, new macroeconomic projections, and monetary policy decisions taken in the period since the previous report. We will also be glad to take your questions and provide additional clarifications if needed. At the very start of the conference, I would like to underline that in the past period, inflation in Serbia has been on a solid downward trajectory, and over the previous months, it has slowed even faster than we anticipated. In view of such movements, our current projection expects inflation to enter the bounds of the target tolerance band already in May, while the previous projection expected this to transpire in mid-year. At the same time, economic activity in the first quarter of 2024 picked up the pace beyond our expectations to 4.6% year-on-year, giving us reasons to believe that we will achieve the 3.5% GDP growth rate this year, whereas in the previous projection, we forecast growth in the 3 to 4% range. All of this indicates that our monetary policy was adequate and that it also ensured price stability in the medium term, a continuation of positive economic growth rates, and preservation of NPL ratios close to the historically lowest level of 3%. We will now give a more detailed presentation of achieved macroeconomic movements and our latest projections. As noted in the beginning, inflation in Serbia continues to lose breath even faster than we projected in February, as well as a year ago. Relative to its peak from March last year, headline inflation this April was more than 3 times lower, measuring 5%. It slowed further owing to the smaller increase in food prices amid the easing of global cost push pressures, which stood below headline inflation as of February and measured 2.9% year-on-year in April. Core inflation also acted as an important drag on headline inflation, and thanks to the past monetary policy tightening and the lower imported inflation in the same period, it edged down by 6.5 percentage points to 4.8% in April. Also, in the majority of neighboring countries, just as in the euro area and the USA, since the start of the year, core inflation has trended at a higher level than headline. Therefore, a priority of central banks' monetary policies will be to ensure that core inflation continues on the downward path. A more detailed overview of core inflation trends in Serbia and the neighboring countries is available in one of the text boxes in our May report. According to our latest projection, inflation will return within the bounds of the target tolerance band of 3 plus minus 1.5% most likely in May, which is somewhat earlier than what we expected in the February projection. This is also indicated by our nowcasting model, through which we obtain and process around 30,000 prices of products and services from around 130 internet sites in real time, and within which we develop techniques that rely on artificial intelligence. So far, this model has been rather reliable in assessing current inflation, and we will continue to develop it in the coming period. In the remainder of the year, we expect inflation to slow further and move around the 3% target midpoint as of next year and over the projection horizon. Such inflation movements will be under the biggest impact of the effects of past monetary tightening and receding inflation expectations, as well as the loosening global cost push pressures, the continued slowdown in imported inflation, and the still subdued external demand. Short-term inflation expectations of the financial and corporate sectors decreased significantly in the past year, and financial sector's expectations returned within the target bounds at the start of the year. According to the results of Bloomberg's April survey, they are almost on the target midpoint and measure 3.1%. Such movements are helping push inflationary pressures further down and, at the same time, speak in favor of enhanced credibility of our monetary policy. The downward inflation trajectory and the expected movements of its key factors in the domestic and international environment are pressing the question of when we should start with monetary accommodation, to what extent and at what pace. Our stance was to adhere to the principle of cautiousness so as not to rush into premature monetary policy relaxation. Our decision to keep policy rate unchanged at 6.5% was dictated by the still elevated, though receding, global inflationary pressures and the persistent and significant uncertainty in terms of movements in global energy and other primary commodities prices. When making the decision, we took into account the fact that the effects of past monetary tightening have been greatly reflected on the cost and scope of private sector borrowing. I would like to recall that the analysis we presented in one of our text boxes confirms the efficiency of the monetary policy transmission mechanism through the interest, credit, and expectation channels. As the key policy rate was kept unchanged for the past months, interest rates in the interbank money market have stabilized, resulting in almost unchanged prices of dinar loans in the period since the prior report. Corporate and household lending remained low in the first quarter this year as well, reflecting the effects of past monetary policy tightening and the maturing of corporate loans dispersed within guarantee schemes. Even so, year-on-year growth in total loans picked up slightly relative to end 2023, measuring 1.3% in March. Credit growth was facilitated by growth in household loan demand and alleviation of banks' credit standards, notably for corporates. The results of our April lending survey show that almost all banks expect credit activity to post growth this year, which should pick up additionally in 2025, and a large number of banks expect growth in corporate and household lending to exceed 5% this and the next year. These expectations are also founded on the positive assessment of the overall economic situation in the country. Preserved financial stability and real sector indicators that suggest a significant pickup in economic activity since the second half of 2023 confirmed that with adequate monetary policy, which was tightened continually but gradually and in a balanced manner, we succeeded in ensuring a soft landing. The preserved financial stability is illustrated by the high capital adequacy of banks of close to 22%, with liquidity indicators almost 2 times higher than the minimum, as well as the share of NPLs in total loans being kept at the historical low of around 3%. This was certainly facilitated by the strong regulatory framework for banks that was implemented even before this multidimensional crisis, as well as the carefully combined and synchronized measures of monetary and macroprudential policies. According to the flash estimate of the Serbian Statistical Office, year-on-year GDP growth in Q1 this year accelerated to 4.6%, and according to our estimate, seasonally adjusted growth measured 1.1% relative to the previous quarter. On the production side, we estimate that year-on-year growth in GDP was driven by the rising activity in trade, industry, and construction, with other services sectors also yielding a positive contribution. In terms of use, growth was driven by domestic demand, where private consumption and fixed investments gave the largest contributions. Faster than expected GDP growth in the first quarter boosted the likelihood that this year's economic growth rate will be closer to the central value of 3 to 4% forecast range from the previous report. Therefore, we now estimate GDP growth at the rate of 3.5%. Other relevant international institutions share similar expectations of economic growth for this year, including the International Monetary Fund, World Bank, and Consensus Economics, and they estimate growth to be among the highest in the Central and Southeast European region. We expect an additional pickup in economic activity to the range of 4 to 5% over the next 2 years, which will be facilitated by the realization of investments planned as part of the Leap into the Future Serbia Expo 2017 program, alleviated global inflationary pressures, and more favorable financing conditions. Growth will be driven by domestic demand, with a positive contribution of all components. Private consumption will increase owing to the continued growth in employment and wages, notably in the private sector, but without major inflationary effects, given that wage growth will be largely a result of increased productivity. Considering that in the past months we heard comments that inflation has eaten up citizens' living standard, I would like to stress that wage and pension growth and decelerating inflation have pushed year-on-year real wage growth in January and February to 9.2% and pension growth to 14.2%. That the living standard is improving is attested to by the increase in the coverage of the average consumer basket by the average wage, and increase in the coverage of the minimum basket with the minimum wage to around 94%, which is the highest level on record. Wage growth and its relationship with inflation was elaborated in more detail in a text box in the current issue of the inflation report. Investments, both private and government, are still an important factor of economic growth this year, as they boost our economy's output potential. Investment growth is expected amid a high inflow of FDI, increased profitability in the previous years, and maintained investment confidence. And it will be further facilitated by the loosening global inflationary pressures and more favorable financing conditions. Also, investment growth will be under the impact of the realization of projects in transport, energy, and utility infrastructure. Despite the anticipated continued growth in exports, which will pave the way for investments in export sectors from prior years, and a gradual recovery of external demand, we still project imports rising faster than exports due to the accelerated investment cycle and needs for the import of equipment and raw materials, which will result in a negative contribution of net exports. A pickup in investments and the consequent import growth is also one of important factors why we projected gradual growth in the current account deficit in this and the following years. This year, we projected it at around 4% of GDP, and in the coming years at around 5%. In our judgment, the current account deficit will remain fully covered by net FDI inflows, which was the case in the past 9 years as well. This will ensure the sustainability of our external position and a continued increase in FX reserves, which are currently at a record high level of around 25 billion euros and significantly above the criteria used for assessing their adequacy. The current account deficit remained relatively low and in the first quarter this year equaled 2.3% of GDP, with a reduced deficit in goods and services trade as a result of the continued growth of manufacturing exports, a two-digit hike in services exports, and the rebound in agricultural commodities exports on the one hand, and lower energy imports on the other. The current account deficit was covered by FDI inflows to Serbia many times over, given that in the first 3 months of the year they equaled around 1.3 billion euros, while including the preliminary data for April, they reached 1.7 billion euros, thus supporting the continuation of appreciation pressures. Under these circumstances, and in order to maintain relative stability of the dinar vis-à-vis the euro, in the 4 months of the year, the NBS intervened by net purchasing FX in the amount of 530 million euros. All of the results I presented, including the reduction in fiscal imbalance and the downward public debt trajectory, but primarily the resilience of our country that our country has shown in the past years, have driven Standard & Poor's last month to raise Serbia's outlook for obtaining investment grade. This is yet another confirmation of our responsible economic policy conduct in the years riddled with global insecurities and overlapping global crises. Increasing Serbia's credit rating to investment grade is one of the strategic goals of the National Bank of Serbia and the government. And once it is reached, it will ensure that Serbia is even better recognized on the international investment map and that it has more favorable conditions for financing the government, corporates, and households. Ladies and gentlemen, dear colleagues, we will now take a closer look at risks which, if materialized, could affect the deviation of achieved inflation and economic activity in the coming period from our projections, thus by extension impacting our future decision-making. Uncertainty regarding the materialization of inflation and GDP projections still largely stems from geopolitical relations and prospects for global economic growth, as well as their impact on the global prices of energy and other primary commodities. The effects of different levels of global prices of oil and primary agricultural commodities are presented in a text box about alternative projection scenarios. We must underline that the materialization of these risks should not have a major impact on our inflation projection or lead to inflation exiting the target bounds. To a certain extent, the risks also pertain to the persistence of core inflation globally and the length of monetary policy tightness by leading central banks. Risks to the projection also arise from the pace of growth of domestic demand, notably on account of the level of FDI inflow and investments in infrastructure and the energy sector. As for domestic risks, the outcome of the agricultural season at home is relevant, and in case of inflation, it mostly pertains to movements in fruit and vegetable prices, while in case of GDP, the yield of cereals is particularly important. Overall, risks to the inflation projection and risks to the GDP growth projection for this and the following years are judged to be symmetrical. The key message with which I would like to conclude my introductory speech is that our past monetary policy measures were efficient and yielded the desired effects. Our priority is to keep inflation sustainably within the bounds of the target tolerance band going forward and to preserve financial system stability, because along with the maintained relative stability of the exchange rate, this is the best way in which a central bank can contribute to the certainty of business, strengthening of macroeconomic fundamentals, and ensuring a favorable outlook for our economic growth. This way, we safeguard investment confidence and support employment growth and the living standard of our citizens. In line with the achievement of these objectives, and assuming that in the coming period we will sail through more peaceful international waters without major winds and storms, we will estimate when and at what pace we should begin with monetary policy accommodation. And if it happens that we are again exposed to storms from the international surroundings, we have shown in the past years that we are able to navigate even the most severe ones. Nevertheless, we hope that the years ahead will bring fewer challenges than the ones behind us, and that this will help us achieve faster economic growth and overall progress of our country and all of our citizens. Our colleagues from the Economic Research and Statistics Department will give a more thorough presentation of our projections, after which we will take your questions. Savo, you may have the floor.
Thank you, Madam Governor. I would now like to give a few more details about the projection and the assumptions underlying our latest projections, and I will also touch upon the risks that may affect the outcome of the projections. The strongest risks emanate from the international environment, that is the geopolitical developments and other events that may impact, that is the energy prices, primary commodity prices, and global growth is also important as it spills over to the developments in our country. As for the global growth, the global economy has proven to be more resilient than initially believed. And in the last IMF analysis and the latest reports for 2024, the growth was revised up by 0.1 percentage points to 3.2%, which is also the projection for 2025. What is particularly important for us is euro area growth. The IMF expects this growth at 0.8%. In our projections, we were even a bit more cautious because we took into account the ECB's projections that set the growth at 0.6% for 2024 and 1.5% in 2025. As for the euro area and the US, where the most important impacts materialize when it comes to the relevant markets, there is resilience of core inflation impacted by the prices of services and tight labor markets in the euro area and the US. And these factors may influence the moment when in these countries, in these markets, monetary easing will take place, which will, of course, affect other global flows and translate onto emerging markets as well. As for our country, inflation projection is similar as in February. We expect a continuation of the downward trajectory until the end of this year and next year. Inflation will enter the target band most probably this month, and later on inflation will move around the midpoint of 3%. As for the average values of inflation are almost the same or similar as in the February inflation report. For this year, we expect average inflation at 4.4%, in 2025 at 3.3%. As for the short run, in the next 2 quarters, in the current quarter and the third quarter of this year, we expect inflation to be, that is, the projection is somewhat lower than we had then in February, because in the first months of this year, we had lower inflation outcomes than we planned, that is then projected in February. And this is largely due to food prices, which are declining even faster than we projected. For 2 months in a row, in March and April, we had year-on-year growth of food prices, which is lower than headline inflation. 2.9% was the food price growth year-on-year in March and April, compared to headline inflation, which equaled 5%. The fact that in April inflation was the same as in March was also expected, because in April we have the new yields of this agricultural season, and at the start of the season, fruit and vegetable prices are usually somewhat higher, and we now expect these prices to decline. And this is already visible in May, and it will be visible in the coming period, and this will help inflation to go down. As for petroleum products and oil, we had volatile movements in the past period, and this was a stronger risks to the projection. The oil price even exceeded $90 per barrel at one point. And we also saw the intensification of the Middle East crisis and the OPEC countries' decision to cap output, which is valid until the middle of this year. So these factors had an impact. After that, the oil price in the international market fell again. But this is a risk that we took into account in our projections, and the oil price is the input for our projection, and it is higher than in February, and at the end of the year we expect it at $84 per barrel. We expect the oil price to go down further, but the end of the year will be slightly higher than in February. As for global food prices, we still have a disinflationary effect, but it is slowly being depleted because the base the base is going to end after 1 year. Of course, in the coming period, the contribution of this effect will be present and it will have a disinflationary effect, but it is declining because the effect of the high base is not so strong any longer. As for administered prices, we slightly reduced the projection compared to what we had in February. We now expect this growth at 4.3% this year. In February, we had 5.2%, and this is largely, of course, in this projection, we didn't take into account electricity and gas price hikes. So the contribution this year is smaller, and these price hikes will drop out of the inflation calculation. And when it comes to the GDP projection, changes for this year, as the governor said, concern the central value of 3.5% because there are no longer risks. Of course, there are risks, but they are much smaller because growth can be smaller, but we decided to have this central value, and we also have the value of 4.6%, and the carryover effect from the previous year was also noted. We have positive effects in the industry, in construction. For example, when it comes to construction, the construction works were higher by 18.3%, and due to all these factors, we projected GDP growth of 3.5%. As for the next 2 years, we still project the growth in the range between 4 and 5%, and we still expect a positive effect of investment, the Expo program, and all other projects that have been announced and that are spoken about in the public. So the effect of the industry construction infrastructure projects is very important, and it will push up GDP growth. We also have services here and overall consumption. We also have the private consumption, the increase in wages and employment, and this increase is not projected to exceed the nominal GDP growth, meaning that it will produce no inflationary effects. So these have been the details about this segment. Mira? Now we will present more details when it comes to core inflation, because as the governor said, core inflation mandates caution at the international level. That is why the leading central banks, the ECB and the Fed, have still not started a monetary policy easing. All the markets expected them to ease their monetary policies at the start of the year. There are different concepts of core inflation. The most frequent measure is the exclusion of the more volatile components, such as food and energy, and monetary policy measures have the greatest impact on that. From 2021, when we saw the strengthening of inflationary pressures globally, we have seen that in the region of Central and Southeastern Europe, which was in our focus, headline inflation grew in all countries, and the peak was reached either at the end of 2022 or early 2023. And then inflation started to go down practically at the same rate as it grew. All the time, headline inflation in all countries was lower than headline inflation, but the situation changed since the start of this year. Headline inflation is declining faster because of the food prices and the base effect for food prices and the easing of all global cost push pressures in food production. So headline inflation in all inflation is now lower than core inflation. A similar inflation is in the euro area and the US. So what about Serbia? Since 2021, inflation in Serbia has been going up, and the peak was reached even at a lower level than in most of the observed countries in the region of Central and Southeastern Europe. because of the base effect. In these countries, we saw a slower pickup in inflation. In all countries, including Serbia, we saw a significant decline in core inflation as well, which was the result of monetary policy measures of central banks, that is the tightening of monetary policies of central banks. What is happening in Serbia is that since the start of this year, we didn't have the situation, as was the case in other countries, that core inflation was above headline inflation. In January and February, it was lower. In March, both core and headline inflation were at the same level and equaled 5%. And in April, core inflation slowed down further to 4.8%. As for the structure of core inflation and the movement of prices of services and industrial products, excluding food and energy, we can see that in other countries in this period, since 2021 until March this year, that we made the analysis for, the prices of services grew faster than prices of industrial products, which is linked to the factors from the labor market, that is wage growth. Contrary to this, in Serbia, we saw higher growth in industrial product prices than service prices, which confirms our earlier analysis that labor market factors did not have a significant impact on inflation in Serbia. As for the expectations going forward, we expect a further deceleration of both core and headline inflation. And due to the fact that core inflation is the most persistent and the stablest component of headline inflation, most probably core inflation will decline more slowly than headline inflation in all probability, and its decline will be affected by the exit of last year's hikes in the prices of electricity from year-on-year calculation. But the target has been defined for headline inflation, and as the governor said, it will most probably return within the target band this month. It is expected to continue to slow, as well as core inflation. And as for the next year, headline inflation will move around the midpoint.
This was our introduction and presentation. Now you may have the questions. Milica Rilak from Business RS. Is the new yield, the new harvest, the only thing that has caused a halt in inflation slowdown? It was 5% in both April and March. Or is there any other factor that resulted in this level of inflation? And my second question is about lending activity, which posted slight growth. So which loans are in demand for households and for corporates? And can you tell us something about lending rates? As for the slowdown, like you said, the halt in the slowdown, yes, partly it was slowing down fast. You noticed that well, but it was. We said it was even faster than we expected. April is a month when we see the prices of new harvests, and when you asked if this is one of the reasons, yes, it is. And all other prices are more or less in line with our expectations of their movements, and the contributions of other categories are in line with what we expected. And we can say the same about food prices. In the first quarter, their growth was 0.8%, which is seasonally lower growth than usual for the first quarter. So here we also saw one effect of these, of the many categories. When you go into food prices, fresh and unprocessed and processed, some of them were even in negative zones. So we had a nominal reduction in their prices, but we can say they have already, some categories have already returned to the levels perhaps even before these price hikes. So partly this effect has been exhausted, but this doesn't pose any threat to inflation's downward trajectory in the next months. But as you say, part of the slowdown is the result of the new season. It's a period when in April we have this lower prices, new yields. So the season is so far good. The time is working in our favor, so we expect this to play out in accordance with our expectations. As for your second question about lending, first, we must stress that the slowdown in lending was something that was inevitable to happen in the prior period in order to rein in inflationary pressures, because the National Bank of Serbia tightened its monetary policy precisely so as to limit the inflationary pressures coming from the demand side. And through inflationary pressures, they spill over onto price growth, onto food and energy price growth, and then onto other prices. Since the start of the year, as the governor said, we have a certain pickup in lending. In March, year-on-year growth in lending was 1.3%. To households, it was 2.7%. And lending to corporates was stagnated. But what we must underline is that in addition to the monetary policy tightening effects of both the MPS and the ECB, which reflects on the prices of euro-indexed lending, corporate loans are also under the effect of the maturity of the loans dispersed previously under the guarantee schemes. And they were dispersed in the amount of more than 2.1 billion euros. And these loans, since the second half of 2022 and during last year, these loans fell due, and this effect is now lower. Banks do expect a rise in loan demand, both in terms of corporate and household loans, because after a longer time, banks have eased their credit standards, precisely having in mind the positive assessments of movements and a positive assessment of the overall economic situation. As for the factors affecting demand growth, that is, which loans are in greatest demands, when we speak about household loans, the greatest demand is for cash loans. But since the start of the year, we also saw an increase in housing loans, which must be underlined. And in the second half last year, we saw a decrease in this type of loans. But now we are seeing a hike again. As for corporate loans, we expect growth in all kinds of loans, both investments, fixed loans, and all others. In the April bank lending survey, we had an ad hoc question pertaining to the expectations of banks in terms of lending. Banks expect both growth in household, corporate loan demand, and many of them expect this growth to exceed 5%. As for your last question about lending rates, given that the key policy rate was last increased in July last year to 6.5%, afterwards it was left unchanged, we have seen a stabilization, which was our expectation. We saw a stabilization of interest rates in the money market and in turn on loans. The price of corporate loans remained almost unchanged. In March, the average interest rate on corporate loans was 8.3%, and as for household loans, we even saw a slight decrease by 0.5 percentage points, and the interest rate on dinar household loans averaged 12.3% because banks had some promotional activities, especially in terms of cash loans. Loans on euro index corporate loans were 7.1%, on euro indexed household loans 6.5%, and here we have even seen a fall, which is a result of the MBS's decision to limit the rates on household housing loans.
Since the start of this year, around 4 billion. That is 4 billion dinars. Mira has given you detailed and precise data. And now I will say the introductory sentence, which is indispensable. All monetary policy measures aimed at reducing inflation have the aim to limit lending and consumption, because you cannot lower inflation while keeping the same quantity of money in circulation, or maintain among the newly approved loans the same amount. It is interesting that in early 2023, we had the most significant growth in January and February. That is, demand for cash loans was very strong, and you know that there is the need to survive, but to get a cash loan, you have to fulfill the credit conditions, meaning that employment and your wage allow you to borrow. Mira has given you information about interest rates, and I believe it is time for us to say loudly that a part of money that we have from the European market, where we had zero or negative rates, resulted in loans of 2.9%. And we have to get used to a different price of money, which will mean that when deciding whether you should borrow, you should really take into account the elements that we talked about, the price of loans, the profitability of the economy, as well the projects that money is invested in. That's why we are seriously considering what it means to invest in a job or non-productive spending. We, as the National Bank of Serbia, always strive to act in an educational manner, and we believe that we will, in a certain period of time, within a year, for example, in addition to the average interest rates that we talk about, that we will be able to ensure what is not a frequent practice in Europe, but does exist, meaning that we should ensure by law the possibility that we publish the data of all banks by all types of loans, that is the data on the level of interest rates on particular types of loans. Because in the European public, there is this growing awareness. You can take a look at available information on the internet. The purpose of banks is not to create the conditions for financial speculations by ensuring funds that somebody buys on competition and pumping up the balloons of the value of their own shares without enhancing one's productivity and by buying competition. But care should be taken about the fact that loans that are disbursed are invested in production services, and here I'm referring to services, but also I'm referring to something that creates a value added. And this is my founded hope, that we are returning to traditional banking, where banks should help the creation of a value added through GDP. But I would like to use this opportunity as well to say, to inform you about something that is really interesting. We always believe that everything in the world and Europe is always better than in Serbia. But I will share with you a concrete example from our consumer protection department. The National Bank of Serbia, back in 2019, introduced the obligation of banks to return to their consumers what they take from them as the fee for the early repayment of loans. Since 2019, annually, consumers were reduced their debt to banks by 5 million euros. And in 2022, when the interest rates went up in Europe, and when we saw the acceleration of the early repayment of loans, this amount was certainly somewhat higher. We don't have precise data about that, but certainly each year, owing to the NBS decision since 2019, banks return this amount, which equals around 5 million euros. So why am I mentioning this? It was only in late 2023 that the EU adopted a directive obliging banks to this practice that we have been applying in Serbia since 2019, and many EU countries have still not applied this rule that loan consumers should be returned once they repay their loans early, their money, which is done in Serbia. But I'm not surprised about this. I just wish to share this news with you, because everything that is good is implied, and everything that goes in favor of citizens is taken for granted. And of course, there are also some negative complaints which are being talked about in the public, but these are rather incidents. And the National Bank of Serbia responds to these incidents very effectively. This also includes some frauds for payments through Apple and Google. We oblige banks if they have insufficient protection from phishing or smishing, where we have SMS phishing, so they do return this money to their consumers, so all the damage is reimbursed. And I will not emphasize any bank individually, but I wish to highlight that owing to the efforts of our Consumer Protection Department, there have been over 70,000 dinars returned to clients. So clients have been they were paid back the last penny because of the damage they suffered. And we have these monetary effects, and we wish to, in this way, prevent such occurrences in the future without jeopardizing the digitalization of products and innovations when it comes to such speed. But we also have an enhanced level of caution in this way. So this is out of the boundary of your question, but I just wanted to add this because this somehow corroborates the truth.
Jovana Dobranović from Politika. If I could have a clarification, you said that in May inflation would return within the bounds. Does it mean that inflation in May will be 4.5%? Or will it be even lower than that? Who can guarantee? But you can share our expectations. You know, inflation depends on a large number of factors. When we say that it will most likely return within the target bounds, it means that it will be 4.5 or lower. It's hard to say to a decimal point. The Serbian Statistical Office also tracks the prices of more than 600 products. So, of course, not all of them have the share amount, they have the same share in the inflation, and it's difficult to say how much will it exactly be. These are just models and assumptions that we enter into our projections. We base them on everything that has happened since the start of the year to date. The governor also presented models that help us gather a lot of data within big data, and we analyze them and rely on AI as well. So all of this is just one big package that gives us a possibility to see what we could expect going forward, but we can't tell you to a decimal how much it will be. The upper bound is 4.5, yes. I can also give you an answer in my way, completely straightforward. I expected that the data we got of 5%, I expected it to be 4.8%. Our models indicated that it will be 4.8, our data for April. However, when we got from the Serbian Statistical Office, when we got their data, I was, just as probably you, I was disappointed that it wasn't 4.8. I was even worried about the monthly growth in inflation, which was evident. But you can never know with certainty or claim with certainty that it will be so. Because as I said, we track 30,000 prices on 130 websites, and we analyze through machine learning and so on. But when will this be? For instance, one year it was potatoes, another year it was carrots. This year it's cabbage that just deviates from what you expect. So you cannot claim with certainty, but these are our expectations and projections. And every opportunity is an opportunity for me to talk about the specificity on inflation in Serbia. Yes, this is imported inflation that has an effect. Government has taken up responsibility not to shift the balance and the price of inflation onto households and corporates, because the government doesn't want that the prices of energy is fully borne by households and corporates, which is what's happening in other countries, such as our key trade partner in the EU, and that's Germany. The number of bankruptcies in Germany, I don't even want to go there. I don't even want to say that in Germany they wanted a cold shower in their swimming pools so as to save energy. As a small and open economy, Serbia cares a lot about financial stability on the one hand, as well as political stability on the other, because political stability enables foreign investments. It helps people who come here to open factories that they should have an acceptable energy price. This is why the trajectory of our inflation is completely different from that of other countries, as well as when our inflation reaches a peak, how slow or how fast it moves, and whatever is happening here. This is our characteristic path with which Serbia wants to remain an attractive destination for opening factories. Opening factories is not just about cutting the ribbon. It's about wages, about creditworthiness, about economic growth, credit growth, everything that we call progress of a country within which we can talk about real growth of both wages and pensions. I apologize for broadening my response, but we should say this often because we invest so much effort that our projections are as precise as possible. But when we have a deviation, I don't want to just rush over it. Just like I don't want and I cannot have somebody say, why did you return 40 tons of gold to Serbia? You are witnesses that here in press conferences, I said in 2019 and 20, when we bought 9 and then later 3 tons of gold abroad in Basel, and we had them there in Bern for a while, in Switzerland. But when we saw what was happening in the world internationally, regardless of the fact that our gold was designated anonymously, we decided to bring it all to Serbia, and so we did. We brought these 12 tons of gold to Serbia. There was only 1 ton left from succession in Switzerland. And then somebody asks you publicly, why did you bring 40 tons of gold to Serbia? And then you ask yourself, is this ignorance or a lack of information or an abuse of data? Or is it just unnecessary making a fuss? We had 16 tons in 2012 in the country and 1 ton abroad. We bought 12 tons abroad, and today we have 41 ton of gold in the vaults of the National Bank of Serbia. And the price of this gold by ounce is $2,327, according to yesterday's prices. Why am I saying this? Because the key debate internationally now is whether to invest in gold, which is what China is doing, and the US, or invest in technological companies. NVIDIA's shares are rising significantly. And why is that? Because they're trying to evaluate what is it that will be the best investment for the money you have earned. Some people think, rightfully, I should say, like an analyst whom I've been tracking for years, Mr. Bremer, and he says, in future, we won't have a bipolar world where you have Chimerica, the conflict between China and America, because now they have become so interlinked as suppliers and consumers and investors that there cannot be a conflict there. We will have countries on one side, and the other side of the bipolar world will be technological companies. What we call colloquially AI, artificial intelligence, technological companies that will completely neglect the power and the role and laws of any national government and country, and which will create a parallel reality, so to speak. And that this is already happening tells us the fact of the January 6th in the US last year, the Capitol riots, then what happened in Brazil. So you have to create the opinion of citizens by imposing AI, and this isn't something that will just compensate for the lack of workforce, but something that will create directly and publicly. I quote Mr. Bremer, who says, technological companies will decide on what the kind of the world we will live in, whether it will be a world in which will be divided by hate and lies, or these technological companies will work to the benefit of mankind and civilization. And I will end here by sharing this brief information that this future world, not in 20 years, but in just a few years from now, will certainly be a world in which government will be on one side and the technological companies on the other. So Savo cannot claim that it will be 4.5, but everything speaks to the fact that unless some more critical geopolitical tensions transpire or some large deviation, because we count oil at $84 per barrel, but if there are any major deviations, we cannot guarantee anything that we have said already, but only that we will do like we have so far, that we will try. We have increased our FX reserve since 2017 by 9.5 billion euros. Now we have 21 billion net FX reserves, of which, like I said, 41 ton is gold. And to this Serbia and our citizens, this should be like an anchor or a proof that we are conducting adequate monetary policy in unpredictable times. But this provides us security through employment and peaceful life in which we do not expect what they call conflicts of any kind.
Perhaps the problem with the vegetables could be solved if we follow the price of Russian salad. Last week, an albino DB Bank had an investment forum, 2530, and it was said that the region is a large source of growth for this group and that everyone will enter the EU sooner or later, Montenegro in 2028. And there is also the possibility to borrow by at least 50% more per capita because we're not over indebted as clients. And in this way, the corporate sector can have huge borrowing capabilities. Sometimes the banking industry is less or more profitable. And what do you think? Are there possibilities now for the banking system to develop further? Because at one point we had a reduction in the number of banks. The competition is strong. But if we see that there is a huge potential for growth from the green economy, ecology, and so on, can it be controlled so that it doesn't develop so suddenly? Whenever you say an increase in debt and whether that can go up, somebody says, yes, it can go up. But I always ask, but why indebtedness? So that for investment in oneself, in education, or that when it comes to private business and something that will yield a profit, that will repay the interest and help you increase your living standard or the job that you do, yes. But we have witnessed, that is, we witnessed from 2008, from 2002 to 2008, we had some peaceful period, and then we also saw the debt going up when we saw changes in the system, and now owners of companies are buying their own stock and so on. And now we have this sentence: you're smart if you can smartly use the circumstances and the weaknesses of the time that you live in. When you buy for cheap money real values, or if you cheat through Apple Pay or Google and take money from people and you buy cryptocurrencies abroad when there is the lack of control. The question is why we take debt and where this debt can go up. And whenever you talk about the green agenda, borrowing, or the green economy, yes, we should think about sustainable conditions of life and climate changes, of course. But on the other hand, we cannot shift the social ship, change its course, and change the sources for corporate operation. So, for example, we stop using coal and turn to the green economy. So everything should be gradual, because the things that grow gradually can be sustainable. But of course, I wouldn't like that on one hand we enter what is called borrowing by citizens, whereas at the same time the first topic in the media becomes the personal bankruptcy, and how to save people from that, and when they're not sufficiently informed. You will agree with me that the main problem has been the asymmetry of information between those who offer money and the asymmetry of information on the side of those who take that money as a loan. So it is upon us to support each kind of borrowing that the borrower can withstand, and for him to be able to withstand that, he needs to have a realistic plan of repayment and all the information about the bank's offer. And our role lies in that. We have to help them to be informed to the greatest possible extent when they take any kind of loan. And I will say also that, yes, the banking sector is growing, but savings are also growing, and these are not the savings of the banking sector, but the savings of our citizens. Today we have 14.9 billion euros in savings. And as for dinars, we have 155.40 billion dinars in savings. And these are not the savings of banks, these are the savings of citizens. These are the deposits of banks, and I expect from banks to pay these deposits in a commensurate way, and that there should be no great difference between the price of lending funds and the deposits that are paid at a low level, the deposits of citizens. So here in Serbia, the sources of funds or deposits of corporates and households, or we have subordinate loans of these banks, home banks. So banks are free to pursue their own market policies, but we limited this when we wanted to achieve one of our objectives. We didn't want to increase the NPL ratio, and we achieved this aim. So we have precise data on this. So banks did not somehow translate this cost when it came to capping these interest rates on household loans. They didn't translate this cost to other costs, because we are following this, and we can still see that their largest revenue from interest is on newly approved loans. Mira told you the cost, and on the existing loans as well. The profitability of banks, 1/3 of total profitability generated by interest is ensured by the National Bank of Serbia, whose remit is to ensure price stability by withdrawing excess liquidity through repo operations on Wednesdays. And we, in this way, disable that all measures that we usually undertake as monetary policy measures. We don't leave excess money in circulation, because in this way we will not be able to bring inflation within the target band. Yes, this does cost, but on the other hand, the National Bank of Serbia has FX reserves. We do not invest the gold, it is here with us, but the rest of the FX reserves and the high prices, we do place them without counting on the fact that we should prove ourselves to be the most profitable, but a part of this earned sum of money from investment of FX reserves. And now FX reserves, I can't say that money does not earn. Yes, we do have some profit, but a part of this earned money is spent on the withdrawal of excess liquidity. That is, we buy these euros. And I would like us to understand finally that the central bank does know what it is doing, because it has been doing this for the last 12 years, and it has been successful in this. It has been buying foreign currency when we have appreciation pressures, which are the consequence of FDI, an orderly business environment where it is possible to earn and to bring out the profit. This year, 1.9 billion euros will be taken out as dividends by those who invested here. And this is the logic of the market economy. You invest in order to earn, and you can use your part of money in the way you wish by taking out that money for your shareholders. But in total, the dividends of the corporates and banks stand at 1.9 billion euros, and it is the last year's level as well. On the other hand, we do not have any problem with this, with the fact that they take out a part of their profit, because we also have significant reinvested earnings, and we expect that the amount of FDI from the last year should be repeated this year as well, 2.4 billion, because people invest here because they know they will be able to use their money freely. So in this whole circle, we have to care about the non-performing loans. So these non-performing loans should not become uncollectible loans. We have to take care about each loan of each bank. We follow the sessions of their board of directors and so on, and we follow the flows of these funds, and we aim to preserve price stability and return inflation within the target band. And by these policies, which are not the aim unto themselves, we also have to support economic growth, which will enable construction, investment, employment, and the growth of our country. So our job is very complex. And I don't like it when they look at us only through the prism of the FX reserves and the stable exchange rate and the stability we have ensured and the beautiful building that we maintain, and we also maintain the interior and the exterior of the building as well. The job we do is very important. We are doing it together with the government of the Republic of Serbia. Our aim is investment grade, so borrowing will be cheaper, but also each company, the largest or the smallest one in Serbia, will get a higher value in the world if somebody wishes to buy that company, for example, or to invest in it or to do some recapitalization and similar. And I believe that our quarterly presentations of the inflation report are useful, and we inform you about some other things as well. And they're not actually sufficient for the public to know what is happening in Serbia. And we also have the regulation of the National Bank of Serbia, but there will be some opportunities for all those who are interested in this information. They can just access the information on our website, and they will be able to invest with more certainty and borrow with more certainty. And I will also tell you the following. There is a bank offering, believe it or not, a housing loan, 25-year loan at a fixed rate of 5%. Do you know what trust this is? Trust in Serbia. So a housing loan at a fixed rate, 55-year loan at a fixed rate of 5%. They also announced that in dinars, we have insured the conditions. But why are banks cautious? Perhaps they're somewhat inert as well, but I'm convinced that the attempts of those through different financial derivatives, they will go back to what is called traditional financing and lending of an apartment or of everything that is productive. But they just invent different instruments whereby you get nothing for something. So there is no nicer vocabulary than this one that I used. So we are very cautious, actually, when they try to explain to us some new financial derivatives, hedging instruments, and when we call these institutions to meet us, they're not able to explain it to us properly. And we have 10 questions to which they say you will get the answers later. If somebody is not able to explain to you what they want, and they came to offer a service to you, so there is no use of this job. However, I have to admit that I'm surprised. Perhaps this is the result of the age I have and my experience as well. The level of superficiality is really surprising me when it comes to the introduction of some services, equally as the absence of the feeling for the brutality that is going on in the world in general. So this indifference when it comes to brutality of any kind is really concerning. I don't know, many of you, some of you are of my age, there are also younger people, you read a lot. There is an Austrian writer during the 1940s, Hermann Brosch. He wrote a beautiful book where he was describing violence. Yes, he said violence has always existed, terror, brutality, and so on. But we live in the world, so those were the 1940s, and people didn't react to that brutality and violence in the way they should have. And I'm afraid that we have become immune to brutality to the extent that it is even promoted in a way. And I really don't like this as a person, as an individual. But also, when it comes to business and when it comes to what we work on. So this superficiality is abused, as well as this asymmetry of information where it is only important to make profit rather than to retain clients. That's why I'm proud of all of us, and I'm proud of the banking sector. So we kept euro household rates on loans, and it was important for banks to preserve clients. But I said this several times, and the IMF mission was somehow surprised, but they heard from banks that it was useful for them. They had a reduction of around 10% in their profit because they wanted to preserve their clients in the long run, and they didn't have an increase in NPLs. That is, they didn't have an increase in uncollectible loans that would turn into NPLs. So this kind of approach exists only if you know how mechanisms function, and if you want to have a long-term client, and if you want to observe your bank, not through your function as a member of the executive board, but you want your bank to last for 100 years, and this bank should operate in Serbia for many years, and its clients wouldn't change it. And we enabled this situation as well, because we also enabled the possibility for a client to change his account very easily. And I'm also proud of that, and banks accepted this practice. I'm also proud of our DINA card and transactions. DINA card transactions are on the rise, and together with Union Pay through through Poštanska štedionica Bank, as well as through the American Discovery, DINA card is widely used as well in the world. And there's contactless DINA. Somebody said it has only strip, it is not safe, and frauds were negligible. But we will also have very soon contactless DINA card operated by the National Bank of Serbia, and we invest a lot in the state-of-the-art projects such as the electronic bill of exchange, the IPS system as well that was introduced much before the ECB, for example, and so on. So we do have our flaws, but other people should talk about our flaws, and I talk only about the good, our upsides. So we haven't seen each other for a long time, and I wish to share so many things with you, but I'm somehow inspired. But I didn't understand this link between green salad in Russia, for example, in the question that you asked. So the Russian salad as what? As a component.
Thank you for explaining that to me. So when something is unclear, misunderstandings grow. So now we have cleared it up that this is about Russian salad. Voya still likes Russian salad. I don't. So now we cannot say that we're the same category anymore. One more question. Voya can ask me later if he wants to hear my secret. Anna Zubehari from Nova Television. Please, can you clarify how cabbage contributed to inflation doesn't fall this month? And when will we certainly feel the inflation of the fall of inflation when we go to the supermarket, because basic food staples are still rising? Before Sava explains the contribution of an individual component such as cabbage, I would like to say that there are questions to which you can answer with a yes or a no. There are questions to which such a short response, like when will we feel that when we go to the supermarket, it's impossible for me to say when, because we always talk about a specific buyer, a specific shop, a retail, 6 large retail chains, or a corner grocery store. Where will you feel it, or when? So our task with 16.2, we have brought inflation down to 5%, which means the prices are stagnating. They're now at 5%. We cannot expect them to return to the level where they used to be, because the input components have the prices of input components have risen permanently. So it's impossible to go back to the way it was before. Our individual needs dictate how we perceive all this, our wages as well. And like they say, vote like your fridge tells you to, what your needs are. So these tales are not suitable for us or for you if you write about economic topics. Each of us will feel inevitably, we have to see that if a loan price goes up, credit activity goes down. If we have inflation and we haven't contributed to it in any way because we neither printed money, because we can't do that, we are a serious country, nor would we do that. We're a country with real financing, and we cannot have quantitative easing or do anything to finance anyone. We simply cannot. We do not have primary or any other money issue except the one with the backup, and it depends on GDP and covers that part. What has spilled over from countries that are creative, so to speak, like I said, hedging, and the microwave money, which is not hot, it's too hot, it's burning hot, or any of these examples. But we suffer the consequences because we live in a globalized world, and you cannot not participate in international trade exchange. We are doing everything we can to bring inflation within the target bounds. Our goal is 3 plus minus 1.5%. We want to be open for new investments, to create jobs, to have wage increase for our citizens, as well as an increase in the purchasing power of our citizens, so that when they go to the grocery store, they can feel improvement. I have spoken many times about it, that many people are taking advantage of a situation when you have an inelastic situation. There are people who have to buy bread, have to buy milk, and these products, when you have a man who comes into a grocery store, who is in a rush, who has a child or an elderly person he's looking after, he can't go hunting for lower prices. He has to buy it in the first grocery store that's the closest to him. So some people are taking advantage of these situations, and some products can have their prices much higher, unrealistically higher. We need to have information about more favorable prices, about better quality of products. You know this yourself. From food to cosmetic products, you have shrinkflation, where you have quality, the amounts that are lower, the volume of the product. When you look at the label with ingredients, the letters are very tiny, with all the data about the quality of the fat inside a product and so on. This is market economy, where you have a constant fight between someone who is trying to produce something with as few expenses as possible and to sell the product at a higher cost. But it is the task of every one of us in society to raise awareness of everyone. Inspections are trying to regulate this in their own manner, but we cannot have prices return to the levels they used to be. Transport prices have gone up. We have ruptured value chains. So you can no longer have prices as they used to be. But we are doing everything we can to make sure that in our conditions, the prices are back to sustainable levels, so that each participant in society can realize that the short-term gain is actually their long-term gain, because they have to go and buy something or pay for a service, so go to a doctor's. So if you don't pay on one spot, you will pay in another place. Mr. Savo will now explain about the cabbage.
So cabbage was stated as an example because many products have a seasonal component. And in this regard, the governor mentioned the price of cabbage. There is an important group of products that belongs to the group of fresh fruits and vegetables where volatility is pronounced in the months where we have the new yields. So in our countries, we have these specificities of inflation because food takes part in CPR, accounts for 31.4% of CPI. So fruit and vegetable prices account for 5 to 6% of CPI. And why did we mention cabbage? So that was only an example. So one category when we talked about inflation, its level, and whether it can go up or down by 0.1 percentage point. We mentioned cabbage because we had some volatility in this group of products. When we analyze prices, we go to the individual levels, and I can tell you why cabbage was mentioned as an example, because its price went up in April and year on year by 52%. But this is normal for April and cabbage, and this is what we are trying to explain in the concrete example of cabbage. But of course, there is a large group of products that have such movements in their prices, and they impact inflation, and that's why we mentioned it as a factor. So these are not the factors that can push up inflation by 0.5 percentage points, but these are the small levels, whether it will enter the target band or not. So we just pay attention to these individual categories. But of course, in May, inflation will be around the midpoint, for sure. This is not disputable at all. Bojan Stojanović. I know that you're not clairvoyant, but you sometimes say that you have some visions. So what could be a possible reduction of the interest rates when it comes to household loans? You talked about corporate loans. You said the level will not be the same, but to what extent could these interest rates go down? So it may seem as derision, but Voya said something that is the most important thing. No one is clairvoyant here, but we need to have a vision, and this is true. So all those who have a long-term perspective can achieve something in their job. And if we have information that corporate loans have stagnated more than household loans, cash loans, non-purpose loans, and I think this is the best possible signal in a market economy for banks to lower their interest rates on corporate loans. Whether and to what extent and when. And at one point, the National Bank of Serbia will estimate, just as it is doing right now, that the overall excess liquidity that can make a problem for us when it comes to returning inflation within the target band. So we are withdrawing this liquidity. This Wednesday, it was over 470 billion. That's how much we withdrew. So we will see that this corporate activity is not commensurate with the loans due to the price and, of course, through our executive repo rate. So this is the auction on Wednesday, and we will talk to banks about the fact that they can not only expect to park their money with the National Bank of Serbia and to pay something which is the current rate. The executive rate is 5.57%. This is the latest data. The key policy rate is 6.5. So when it comes to the National Bank of Serbia, keeping this money is without risk. But at one point, they have to know that the banks are not here to work with the National Bank of Serbia and to do only the revolving of the current loans, but they also have to disburse loans. And we expect this with enhanced investment activity activity because of the projects that we're talking about, infrastructure, energy projects, projects concerning the Expo program, and so on. And to what extent this interest will be reduced depends partly on what the sources of banks are. So they have room to reduce their interest rates because we know how much they pay on household and corporate deposits, much less compared to what they earn from citizens. On the other hand, we expect for euro-indexed loans, so what is the ECB interest rates, so this should be reduced as well, and a room should be opened here as well for a reduction in interest rates on new loans. But Voyo, all this is in line, consistent with the risk and the risk profile of a company appearing with the bank as somebody who demands a loan. But thank you for giving us a new task so that we press more banks in this regard, because the current loans, weighted loans, which are not for one bank but for all banks on average, on FX corporate loans, this is 7.1%. And here at the National Bank, they get 5.57%, you understand? Or they have no risk, so there is no disbursement, so the board of directors, the mortgage, and so on. So, but this is not the purpose of bank's operation. So they work only with the central bank, and they get this interest at weekly auctions. And when it comes to corporates, they set the rate at 7.1%. And the corporate sector is complaining that their funds are expensive when it comes to their possibility to sell the goods, which include this interest rate. So, Voyo, you also have a vision. You have identified the problem in the right way. If you have no further questions, I would like to thank you all.